afterwards. I'm like, why am I even trying?
I know.
Oh, we're streaming, I think.
Are we? Okay.
Yeah, we're live.
Oh, it is. It is
Hi,
live now. So
everyone. Hi, Sandy.
there
We're
we go.
testing out Zoom on Facebook Live.
Oh, okay. Hold on, because I think.
Let's see if I can see us on Facebook. I don't see us for some reason on Facebook. I mean, I would assume some kind of notification would come on. Are you able to see people comment if they comment? I don't think it says we're live. Oh, look, view stream, copy stream link. Interesting. Oh, I may have to, this may cause an issue. Oh, we are. I think we got paused. I think.
Are we? Okay.
Yeah, we're live.
Oh, it is. It is live.
This may cause so we're live.
Okay, I'm not sure if it's like reverberating back. Can you, is it? Maybe it's because I had both open. Anyway.
I had both open.
Okay. I don't think we can do that. So I think that's the issue. So we'll just leave.
Yeah, no, I was just testing to see because
Okay.
for some reason I don't see it on my account. I don't know why I don't see a live. I don't know how lives work. Maybe that's why.
Okay, perfect. So we'll just leave it as is. So, okay. Anyway, hi, I'm Sandy Casella from Casella Homes Real Estate, and this is Diana Lizarazo, and we are on the flip side again. Every Tuesday at 1 o'clock, we're here on the flip side talking about investing in real estate, flips, everything, including mindset to do. So every week we talk about something different. Today we are talking about market updates, stats and market updates. Last week we talked about mindset. So we do mindset. The next week we do market stats. Then we do, what are we doing the third week, Diana? Slipped my mind.
Market stats. Then we talk about real estate, just anything real estate related, flips, spurs, whatever we feel like talking about.
And then the fourth week we were doing Q&A, but I think we had kind of thought about doing something different on the fourth week, and I can't remember what that is. So
like it's miscellaneous, and we've just the last one was a Q&A type of thing.
Okay. Perfect. So that's what we do. So I would encourage everybody to like our pages here, like our page so you can see these every Tuesday. If you have any questions, please type them into the chat or send them to us. If there's a subject that you want us to discuss that you're interested in, we're happy to discuss that, especially on the miscellaneous day. And
or any questions you have, we can always answer those for you.
Yeah, and share this video. If you find this video useful for you, share it. Even if right now you're not interested in investing in real estate, who knows? I think real estate investing is one of the best investments you can possibly make. So hopefully you do too. I know you do, Diana.
100%.
So today we're going to talk a little bit about the market and what's going on. And
I'm excited to hear your opinion on everything because I, on my side, at least have seen some changes, definitely. So it'd be nice to hear what you're seeing on your side because, I mean, you got all the data and everything. So it'll be really nice to hear what you have to say about it.
Yeah. So a couple of things. We recently had some changes to the mortgage rules. So that's made a difference, obviously, in the market a little bit. I did a Facebook Live last week, if anyone wants more information on that, with Christelle Malumba, who's our mortgage specialist. And we talked exactly about what the changes were and how they are affecting the market and how that made a difference for people's purchasing power, because that's the biggest difference, right? It's a person's purchasing power. So because people were getting approved at 4.79 and now they need to get approved at 5.29, that obviously makes a difference in how much you can afford to buy. So a person in the past who could buy a home for 700,000 would now, all things being equal, would now be approved to buy something for 600,000. So that's how that's affecting the market. So your purchasing power is less. In terms of stats and what's going on with the market, I'm going to pull up some stats in a second, but basically what we're seeing is kind of what we talked about last month. a lot less multiple offers. There are still in some segments, and if it's a very good property, there's still a very hot market. Make no mistake, it's still a seller's market. There's still a lot of multiple offers going, but we are seeing a lot more properties that aren't getting multiple offers. Offer dates are coming and going, and then it's coming back on the market. Sometimes people are leaving it at the same price, and sometimes they're taking it off and putting it at the price that they expected to get. So it just shows that a lot of people were listing properties at below what they were expecting to get, and now they're listing them at more of a price that they're interested in looking at. So there's a couple of issues with what's gone on, and that's that buyers have been conditioned to believe that the asking price is not what the person will take. In fact, I had a conversation with a number of agents last week where we were saying it's very, very common for an agent to contact us and say, how much is this house? And when we tell them, they say, what does the seller really want? What is the price that they really want? So buyers were conditioned to believe that the price that people were asking is not the price they were willing to take, which creates some issues if you were pricing your property at the price you wanted. So let's say, for instance, a property is going to sell, comparable, say it's going to sell around 900,000, and all of those properties were being listed at 799, hoping to drive the price up to 900,000, but then somebody priced their house at 899 or 900,000 because they believed that that was the market value. People are not looking at that house. So here's an issue where it comes down with opportunity, which you and I talk about all the time, that there's always opportunities. And sometimes what happens is people will look at it and say, well, that one's too high. Because if they're asking 9, they must want $1 million, when that's not what they were doing at all. They were pricing it at the price that they wanted to get. And so people are disregarding that house because in their brain, they're saying, well, they want more money, so I'm not going to go look at that house. There's where the opportunities are, because if that's what everybody is saying, that's where you need to go. So it's always, we talk about this all the time, that whatever everybody's doing, you need to do something different. And that's where the opportunity comes in that property. So you need to be looking for those type of properties where people are not looking because they're overlooking that property for some reason like that. I'll give you another example. So I have a property, an exclusive property for sale. I have it on Facebook Marketplace. I have a sign up. I have it listed in a number of different places as an exclusive listing. So for anybody who doesn't know what an exclusive listing is, that means that it's not on MLS. So I'm marketing the property, it's available, you can buy it, you can see it, but it's an exclusive listing, so you won't find it on MLS. All of my advertising says exclusive listing on my ads, on the sign, and people are calling me and they're asking me, how much is this house? And can you send me pictures? So they want to wait. So what I'm explaining to them is, we're going to do the pic. They're doing a little bit of work on the house right now. They're finishing up some trim and some other things. You can get in to see that property and you can make an offer and you can buy it right now. You don't have to wait for it to come on MLS. But 99.9% of the response I get is, can you send me some pictures? And then I explain, we're going to do the pictures when all the trim is done. You can get in now, but everybody wants to wait to see the pictures. So by the time this house is ready and all the pictures are out there, guess what? This house is now on MLS. So you're missing out on an opportunity. That's where the opportunity is. Go and see the house, or just ask specific questions about the house and then go and see it. Don't wait for the pictures. But that's what everybody does. And then buyers get upset and they blame the real estate agents that we're driving up the price of the house and that we're marketing properties and not letting people get in because we want to drive up the sale price. I'm standing here with a sign saying, come and see this house now. You can buy this house before all the other buyers know it's for sale. You can buy this house now before everybody else knows, and you have a good opportunity not to compete. And people are standing back going, I'll wait till everybody else has a chance to go see it too. It doesn't make any sense to me. So this is where the opportunities come in.
Yeah, and is it an investor type of property, or is it just like a
No, it would be more for an end user. Home? It would be more for an end user because they have completely renovated it. So it's a gorgeous house. An investor, it would be good for an investor in the fact that it's close to Mohawk College. It's fairly close to Mohawk College, Mac in Hamilton. So there's an opportunity for somebody who wants to flip it, no, because it's all been renoed, but somebody who wants to buy it and rent it out as, have students in there or whatever, it's a great opportunity for that. So
That might be why though, because
yeah,
why people aren't calling or are waiting for pictures. Because I feel like investors work that way. Investors really don't need to see a property. We can even make offers sight unseen and then just have conditions to see it afterwards. Whereas,
okay.
like, I feel when someone's buying a house as a homeowner for themselves, they're like a different breed of people. I feel where, like they they may not, for example, maybe, and especially maybe because they see so many offers coming out that maybe they don't want to waste their time if it's, not the kind of house that they want to see, maybe.
Yeah. But my point is that if your question is, send me pictures, and I'm explaining to you that they're doing work, but you can get in before,
Mm-hmm.
then I think asking more questions would be prudent to see. I get it. And it is a process of elimination. So people
Mm-hmm.
don't understand that when you have your house for sale, people are looking at it online as a process of elimination. They're not looking at it to see why they should go see the house. They're looking at it to see why they shouldn't go see the house because they
Okay.
want to eliminate the ones that they don't want to go see. I get that. But when you have an opportunity to get in before other buyers, you should ask more questions and take more initiative to get in there. Why would you wait until everybody else is putting in an offer if you can get in before? I see this all the time. It's not unusual. I've had 2 instances this year where I've had a property listed exclusive before it went on MLS, and an agent brought their buyer through. The buyer took a look at the house. They liked the house, but they decided to wait. The house, both cases has happened. The house that they said, we're going to wait. The house then went on MLS. The house sold for much higher than what we were anticipating it to sell for. And then the agents came back 2 or 3 days later and said, okay, my client is interested. They want to put in an offer. Well, the house is sold now. And then
Yeah.
people are upset that the house is sold. My job is to sell the house. A
Mm-hmm.
seller hires me to sell that house. So that's what I'm going to do, sell the house. So if
Yeah.
you waited and then you missed out because you didn't take advantage when you had advantage, then I can't do anything about that. My job is to sell the house. And in both cases, they had the opportunity to buy the house, and the seller would have taken less money at that point because
Mm-hmm.
we didn't realize how high it was going to go. And they ended up getting, in both cases, I think one was 40 and one was $50,000 more than what we were expecting. So that's a
That
lot of
in
money for the
January?
seller. Pardon?
Yeah. Was that in January?
That one was in February and one was in March.
Yeah.
So I guess that's just the point, that we look at all these things, and we need, if you're looking for the opportunity, and if you're an investor, you're looking for an opportunity, then you
Mm-hmm.
have to take advantage of the opportunities when they come up. You can't wait and then complain because the market is too hot or there's no opportunities, or you know agents are doing this or agents are doing that. We're not doing anything. We're doing our job. We're trying to get a house sold. That's our
Mm-hmm.
job. So I think it's really important that people get that. That's all. That's my point.
Yeah, no, that's very true. And that happens with lots of people where I think it's just it's scary for people to pull the trigger, especially if it's their first time
Yeah.
or any time. It's just such a big amount of money. And so maybe they think, oh, maybe I'll sell for less and I paid too much. And then
Yeah.
like exactly what you said, what happens? Things went much higher and they lost the opportunity.
Yeah. But you can't be scared. You can't be
Yeah.
scared. If you're scared, then you're gonna do what everybody else is doing, and you're gonna get what everybody else is getting. You just can't be scared.
Hmm.
You have to make a decision, right? If you make a decision and it's the wrong decision, it's going to work itself out. Chances are it's not going to be the wrong decision. I More often than not, the wrong decision is not making the decision. Like, how many people, if I could have $1 for every person who said to me in the last 10 years, I'm going to wait because the market's going to crash, I wouldn't need to sell real estate.
Hmm.
Right?
100%. And this rings true very much for people that are homeowners because homeowners stay in their houses for many years. Depending
Right.
on which phase they're in, they're at least going to do 5 years. If they're building a family, maybe even longer. And by then, you've made you've made all your money, like you've made a lot of money out of it.
Right.
So yeah, I feel like for homeowners, I mean, if you're a flipper, you have to be obviously very cautious because you need to make sure you run your numbers. But I feel like homeowners or people who are renters that want to, I mean, buy rental properties and hold things for a long term, yeah, I agree with you completely. You know, take advantage of the opportunities because you, in the long run, you will be making your money
Yeah.
back.
That's a good point. I'm going to see if I can share my screen because I want to show some numbers here. Just give me 1 second here. Let me share my screen. Share screen. Okay. Okay, give me 1 second here. What are you seeing while I'm looking for this? What are you seeing that's happening, Diana?
Um, Similar to what you're saying, I feel like now things are stabilizing. I think what you said is very true about houses. A lot of people are using the strategy of pricing low to get a bidding war. Whereas what you said makes sense. If there's other people who are pricing to the market value, it does, it does scare people away because everyone's thinking, oh, it's going to be a bidding war for every property. And if you're thinking in that mentality, then if you're looking at a house that's already at market value, that is going to scare people away because they're like, if that's already your top, then you don't have much options. But
Right,
that
but
should
that's
also be the responsibility, I feel like, of the realtor to let them know
exactly.
that no, this person is actually, pricing at market value and it's not going to go higher than that because they are marking to what the sellers are wanting.
Exactly. That's what I was going to say. That's where it comes down to having a good realtor working on your side because that realtor needs to be looking for those things because they'll know that no, this house is going to sell for. It's a
Mm-hmm.
simple phone call to the listing agent by your agent.
Mm-hmm.
It's a
And
simple phone
and I
call.
guess it's also the good reason to have a realtor that knows that area because a realtor in
Yes.
that area will definitely quickly pick up those kind of things.
Yeah. Can you see my screen?
Yes, I can.
Okay, so I'm hoping this reflects on Facebook. So here's what I want to show you. I'm going to show you average price over the last, let's go over the last 20 years. We can narrow this. This is Toronto, so we're going to look at Toronto for now, but
Okay.
this is the average price of a house over 20 years. So you can see, yeah, it does go up and down. And look here, this is 2017. This was the highest that the market was at in 2017, and everybody said it's going to drop.
Mm-hmm.
It's going to crash. I'm not buying a house right now because it's going to crash. Look where we are right now. So when we talk about the price of and it being when you talk about it being a long-term investment, this is exactly what you're talking about. So in 20 years, the market has improved 291%. That's incredible. So even
That's amazing.
let's go back even 10 years. Let's say 10 years here. What has the market done in 10 years? The market has increased 126% in 10 years. Here's the other thing you got to understand. Let's go back 5 years. Let's do 5 years because here's something else that people don't understand. You and I have had this conversation before, so I know you'll understand what I'm talking about. So this is 5 years. So like I said earlier, if I had $1 for every single person in the last 5 years who said to me, I'm going to wait because the market's going to crash, I wouldn't have to sell real estate, right? Now, the people who didn't say that, maybe that's better. The people who didn't say that and bought a house, they're in a way better position. I had people in 2017 when the market completely stopped who jumped in the market a year ago, just over a year ago when COVID hit. And almost 99.9% of the people I talked to said, I'm going to wait because this market's going to crash. The people who got into the market at that point, they're all making money. They've all made money on their houses. So you can't be afraid. When everybody else, what does Warren Buffett say? You need to act when there's blood in the streets, because the market is always going to come back up. So let me explain something here though. This is 2017. Let's say here 750. If you bought a house for 750 in 2017, how much did you put down? You put down, let's say 20%. What's 20% of 750? 70, 75? Let's call it $150,000 you put down, right? If you sell that house today, your return on investment is 39%. 39% of 750. But what did you put into the house? You didn't put 750 into the house. You put 150.
Exactly.
Right? You put 150 plus whatever you paid over the last few years, which means your return on investment is way higher than 39%, because you're factoring 40% of 750. If you put $150,000 down, and let's just say you put another 50,000 over the last 5 years, you paid, no, it would be more than 50,000 you've paid down on your mortgage. Let's call it 100,000 you've paid down on your mortgage, which I doubt. Probably more like 50, right?
In how many years?
In 5 years.
In
how much
5
would you
years?
have paid down?
Yeah, probably around 50, I think.
Okay, let's call it 50. So you put $150,000 down. You've now paid $50,000 in mortgage payments, which, by the way, is principal and interest. So part of it you're paying to yourself. Bless you. Part of it you're paying to yourself. So that means that your return on investment is on the 200,000, not the 750. That's what people don't understand. And that's the part that gets frustrating, because you've all of that appreciation that you have is on the 200,000, not the 750. Because the bank still has, if you sell the house today, you pay that off and you don't pay any more interest on that amount. So if you've paid down 50,000, now your mortgage is 700, but your house is worth, okay, so let's say, let's do some math here. Sorry, I need a calculator because I'm not the best at math in my brain. But let's say 750.
I'm glad you got the calculator.
Okay, I'll look bad, Diana. Don't worry, I'll look bad for both of us. Times 40%, okay, is 300,000. So now that house that you paid 750 for 3 years ago is now worth 950,000, right? So you've made $300,000 on a $150,000 investment, not on a $750,000 investment.
Yeah, that's amazing.
Right? That's what people don't understand.
Yeah,
that's
exactly.
Why, that's what you got to look at, right? So even like, and when sellers are selling their house and they say, I'm not getting enough money, where would you get a return of 40%? It's more than 40%. Where would you get let's just call it 40%. Where would you get a return of 40%? You aren't getting a return of 40% in the stock market. So when people say you should rent, because I've had a lot of people who've been told by financial advisors, why would you buy now? You should rent. It saddens me when people are told that. Why should you buy now? You can rent, you can invest that money. You're not getting a return of 40% on that money. I don't care who you are. If you're watching this and I'm wrong, you call me out on it. But I'm telling you, I'm not wrong. I know I'm not wrong. You're not getting that in the stock market. And you can't live in a stock. You can live in a house, but you can't live in the stocks. You have to live somewhere. So that's the whole issue. So when we look at prices here, what's going on, but let's drill down a little bit, because I'm getting off topic here. Let's drill down a little bit about what's going on in Toronto in a little bit shorter time period. So let's just go over 13 months here. So this is, now keep in mind, this is everything. This is, oh my God, look at this, Diana. 34% return on investment in the last year on average. Wow. 34%. Yeah. So if you bought, that's crazy. So your return on investment in the last year has been 34%. Again, I'll say it again, on what you put down on that house, not the total amount. So but now this is everywhere in Toronto, and this is every type of house. So this is a really big range, but that number is absolutely incredible. So, so tell me that real estate is not a good investment.
Yeah, 100%. It's and this is a great way of seeing it, to show people, what is the possibilities. Yeah. And the way, and so when you and I talked about this before, I think we talked about this on the last networking event, which, by the way, the last Thursday of the month, we do a networking event with
investors. And we, Diana will arrange that, and we'll have it posted on Facebook, and investors can get on there and network with other investors and learn. It's a great way. It's a great way to learn about investing. Or if you are an investor, it's a great way to make some contacts there, and also help other future investors who are coming up. But what I was going to say here is, you've talked about this before, that you make your money on the buy. You don't make your money on the sell. So we're talking about this, all things being equal, you're taking this, when you look at these numbers, this is, you buy house A, you just maintain it in that, like how it's supposed to be maintained, and then you sell it 5 years later, this is your return on investment. But what if you bought a property 5 years ago that then you could then improve, right? So now you've made money right there, because if you're going to improve it, that's where you're going to make this return on investment, plus you're going to make what you improved it by. So that's a big part of it, right? The basement is unfinished, or it has the potential to have a second unit, and you add the second unit in there, or it needs some type of work, like where you're talking about flips or burrs or whatever. So I think that's really important, right?
Yeah.
Any other stats you want to look at here?
Well, I was just gonna make a comment that oh, and I just lost my train of thought.
Sorry, I've been rambling here. I apologize. But
what was the last thing you just said? We were talking about
you make your money on the buy, not the sell.
Yeah, and you were saying that a great way to do that is through renovations, and the reason why I just wanted to add on is because a person will obviously pay a lot more for a turnkey property than what it actually costs to renovate it. So if you buy it and it needs renovation, even though you're gonna and most likely you're gonna slowly probably do the renovations throughout the years, but you will still be paying less than if you buy a house that has been fully renovated.
Right. Because you're paying for that work. You're paying for it, right? Like there's a profit that's built in there. So you're right. Mm-hmm. I just got to leave this chart up because it's just blowing my mind, actually, to be honest. But I think another interesting stat, and I don't know if I can pull it up on here. I don't think I can, but the months of inventory on the market right now, I was looking at this stat yesterday, is less than 1 month of inventory on the market. So for the people who are saying this market is going to crash, here's what you got to look at. We have less than a month of inventory on the market, which is a seller's market. A buyer's market is more than, I think it's more than, when you get to about 5 months of inventory on the market, maybe more, that's a buyer's market. We have 1 month of inventory on the market. We have historically low interest rates, under 2%. People are getting financing right now at less than 1.5%. You're not paying. So that means that all of the money that you're paying every month, here's where people get caught up in things. When you look at renting versus buying, when you're renting, let's say you're paying $2,000 in rent. That $2,000 is gone. It's gone. If you're paying $2,000 in a mortgage, part of that money is you paying yourself. It's a forced savings. So you're paying yourself, plus you're building equity, and you can never save as fast as you can build equity. So it's a two-pronged approach there, right? So if you look at that, less than a month of inventory on the market is number one. Less than 2% interest rates, and there was another point that I had. So the interest rates. Well, even though just those two in itself are going to tell you that this market is not going to crash. It's impossible.
And maybe was your third one maybe that everything's starting to open up again?
Could be. It wasn't, but that's a good point too. Everything's starting to open up, which means immigration's going to open up. The schools are going to, the universities are going to start having students come back into school. Guess what happens when the students have to go to school? They have to live near the university. That means that the people who are out of the country are going to come back. They need places to rent. So let's look at the condo market. That might be interesting, eh? What do you think?
Yeah, let's do the condo market.
Toronto.
Yeah, the Toronto one, because I think that's the most impacted, I think, out of all of
so that. Type, let me see, type.
And then I was gonna say maybe we could also do a general one again afterwards, but of the outskirts, maybe doing like Niagara region or something, somewhere a little bit more outskirts.
Okay, I don't know if I can pull that up on here, but I'll try. But just look at this, Diana. Just look at this. In November and December, people were saying the condo market's going to crash in downtown Toronto, right?
Mm-hmm.
That's what people, nobody was buying because that condo market was going to crash. The average sale price was $595. Now, if you were brave and you weren't afraid, look how much money you made since November. This is like 6 months ago. The average sales price was 600,000. Right now, the average sales price of a condo is 681. Toronto is a major world-class city. People are always going to come to Toronto. So it doesn't make any sense. It's always, look at this. So a year ago, the average sale price was 574. If you bought a condo in Toronto a year ago, your return on investment is 18.5% in a year.
When can we do a little bit longer, like a 5 year?
5 year, yeah. Let's go 5
Yeah,
years.
I'm actually because I thought actually that in 2020 that
53% in 5 years.
wow. Can you scroll down, sorry, a little bit? I want to see what are the 2020. That's interesting. Yeah,
Right?
I guess yeah. So there was only really a dip in a little bit, probably in
A year
May,
ago.
April or May. Yeah, April
Right.
was
Exactly.
really
And
only the dip. But it's funny the conversation lasted so much longer because it looked
right.
like yeah, there
Well, it
was like
did dip
another
here
dip.
again, right?
Yeah,
It
there was
did
another.
dip. So,
But I mean, I
but
was always hearing all of last year, everyone's like
yeah,
zero interest in the condo market, like always 000. But it actually was doing pretty fine last year, except for
yeah.
that one dip. And then, I
This
mean, this
one,
year, if anything, was a little bit longer of a dip.
yeah. Again in November, December, January, there was a
Oh,
dip.
but that's normal. I feel like
Well,
isn't that a normal dip over in that time frame?
but let's think of this. What was going on during these times? Okay, so let's look at this. Okay, in April last year is when COVID first hit. So
Hmm.
nobody knew what was going to happen. It dipped. What
Yeah.
happened again in November, December? They started talking again about more lockdowns,
Mm.
and things were getting extended during that period of time, right?
Mm.
So
Yeah.
if you look at what was happening in the news, it's a direct correlation to what happened with the real estate market, which is
Mm.
why you don't read the news or listen to the news, because all you were reading in the news was don't buy a condo in downtown Toronto. The condo market's going to crash. The bubble's finally going to burst. What happened? Look at the people who took the chance back in November, December, or a year ago, how much money they've made. So it's crazy to me. This is insane. Like if you look at
Yeah,
this, so
that's
5
impressive.
years
I'm
ago.
actually in shock by this one.
Yeah,
I did not know that the condo market was doing as well as it's looking.
yeah,
Because like that same thing, like I mean, we for us in our sense, when it comes to renovations, it's just harder to do
yeah,
renovations with condos because the
100%.
restrictions. I mean, I naturally don't really look too much of it, but
Right.
it's just funny the things that you hear because all of last year specifically it was like don't touch it, don't ignore it completely kind
Yeah,
of a thing, like that's everyone's words were that. And but when you look at it,
exactly.
the dip was only really a very small amount of time,
Yeah.
and it like really
Realistically,
corrected quite fast because I
yeah.
mean it also there was a high also like in what January February went up a little, but in
Well,
the
this
national
is, yeah,
trend, oh I meant the last year January, I think it's more
last year, yeah.
February.
Yeah, that was February 2020. So this is a year ago.
Yeah,
This is
yeah, so that
February 2020.
yeah, but that was really like that was interesting because it was just really February where it went up high for
Yeah,
some reason and then went really down in April. But if you look at the trend, like it still continued to go up. So that was
yeah,
yeah, that was really interesting because all of last year is just hearing such negativity about condos.
yeah. Which is interesting, but even like I get your point of view. If you're going to flip properties, condos are a little harder because logistically it's a little bit harder. You've got to get approvals, you've got to get
There's
elevators.
a lot
So
more coordinating
exactly.
involved, which
However, as
sometimes for
an
some people is just like a
yeah,
house is easier.
right. But if you look at the opportunity and you're looking for opportunities, that is absolutely an opportunity, right? So do you want to put up, like, if let's just say if the return is not in the market that you want, but you want to stay in Toronto, but the housing market is too high, yes, it's a little bit more aggravating in the condos, but the upside is there. So you deal with it, right? Or as an investor who's going to rent a property out, keep it long term and rent it out, there's a great opportunity there. So it depends on what type of investor you are. So I mean, it's all of those things, like, you know, the parking downtown and the elevator. They're a cost of doing business. You got to factor it in that it's going to take a little bit longer. You're going to have a little bit more aggravation, absolutely, but your return is going to be really, really good. I don't think we can ever count out the Toronto condo market for the very simple reason that it's a world-class city, and we're still undervalued compared to any other world-class city in the world. And we have been for a number of years. So when people say it's way too high in Toronto, I disagree, because what do we have in Toronto that we don't have in a lot of the other world-class cities is land. And some of these properties, not a condo, because I'm talking about a detached house, there's more land. Look at any others, like if you look at London, you look at Tokyo, you look at any of these other major cities, they don't have land. And land is what makes it worth money. So I think there's still tons of upside in Toronto.
Mm-hmm. Yeah, I agree with you. And
What
it's
else do
something
you want to
like
look
I've
at?
been recently looking at Toronto, because I was always same thing. I guess the stereotype, like Toronto's too high, and, you know, don't look at it. And so I was always looking outside until this opportunity came to do a flip, and
Yeah,
then because I'm in it now, I'm paying attention, because obviously with the flip, I really have to pay attention to
yeah,
the what's going on over there, and it is very interesting because you know, things are like, it's, you always have to do your own due diligence, because
yeah,
you hear so many people's opinions, and someone's opinion may be because they made a bad mistake, right? But like, and then obviously different people, and then that will skew their opinion, right? Because they'll have a negative opinion of something because they just made, you know, they made a big mistake, right? Maybe they didn't have the right people, the right realtor, whatever it is, you know, they didn't have the right person to help them to make the best decisions for themselves.
yeah. But I think the other thing is, like, they don't, you don't know where people are getting their information. But I would always say, whenever somebody is whenever you're hearing a lot of people say don't do something, I think you owe it to yourself to at least go and
And look into it.
investigate that, because
Yeah.
that's where the opportunity is. When everybody is, and the thing about the real estate market is you just can't time it. So if you're trying to time the real estate market, by the time you figure out what's going on, you've missed what was going on. It's too late. So when you're trying to time the bottom, you can't time the bottom, because now by the time you know it's the bottom, it's already, you can't know it's the bottom. It's a law of relativity, right? It's right. You can't know it's the bottom until it starts going up. So
Yeah.
now you've missed it.
Yeah,
So
exactly.
you've got to take that chance that, okay, it can't be that you want to buy at the bottom. It's got to get to a point where you're comfortable buying. And then that might be the bottom, it might not. But even if it goes down, it's going to come back up again. You might get lucky and buy it at the bottom, and you might not. But you're still, you got to make a decision, and you've got to act. And that's what's going to get you, where the opportunity is. Make a decision and act.
Mm-hmm.
Of course, you're going to be afraid. You're always going to be afraid. It doesn't matter at what level of investing you are. You're always going to be afraid, right? And courage is not the opposite of fear. The opposite of fear is just taking action. Take action. Courage is everybody who does things and makes money and does really well in investing. They will tell you they were afraid when they bought. Probably almost every property they bought, they were afraid, but they acted anyway. They did something anyway. And that's where the action comes in. Just do your due diligence, have a plan A, have a plan B, because your plan B could be, okay, hey, I bought a property here and I was going to flip it, but look what happened to the market. It came down. Okay, I'm going to write, this is exactly what happened to me. This is exactly what happened to me. I bought a property a year ago when the market had peaked, and everybody said to me, don't close it, just walk away from the deal. And I said, no, of course I'm going to close it. I bought the property. Yeah, they came down a bit, but look, it's up more. Well, it's up more. There you go. See that line there?
Yeah, yeah.
So you do have to have a plan B, because if you're in dire straits and you can't carry this property, yeah, you got a problem.
Right. And that's what I was just gonna say. It really comes down to the numbers.
Right.
Even I think doesn't matter if you're an investor or not. If you're buying a property, like as long as you can afford it and you give yourself a buffer, which I mean the stress test is going
Yeah.
to do that for you anyway, so that at least helps you look out for you to make sure you are, making the right decisions.
Yeah.
It doesn't like it, yeah, it doesn't matter if the price goes up or down, especially if you're going for something long term anyways, because
Right.
like you said, it's going to go up eventually. Um, it's just there's always going to be little bumps on the road, but it will always be going up.
Yeah. You wanted to look at something else. What else did you want to look at? Did you want to go back
What
to more
cities,
general?
or what cities can you see? I was gonna say
Um,
like somewhere outskirts to see the difference, but I don't know how far out you can go.
on a different platform, I can go farther out, but I'm on here, so let's see. You
Mm.
want to go Niagara? You wanted to see Niagara?
Yeah, I could do Niagara. Oh, well, Wellington, Orangeville.
Okay, I don't have Niagara here.
Or you could
I,
do, how about Hamilton? Hamilton, it's your area too, so you
yeah.
can talk a lot about it at the same time.
Okay, so this is condos. Let me change that. Let me just fix this. This is condos in Hamilton. And
But interesting, at least condos in Hamilton, their
yeah,
return on investment has been 8%. And
right. But
that's
if we
been like
take out,
going up and down actually.
well,
We're in a
this
what?
is this is January 2017. So let's even just take out. Let's go instead of 5 years. Let's go 4 years and take that anomaly out there. Your return is 20%.
Oh wow. Oh, so it's because of what happened in 2017. Was
Well,
that
2017. Remember the prices went up and then they came down.
that was
We
that
had
was
that blip.
2017? Oh, okay.
That was 2017. Yeah.
Oh.
So 4 years. So let's see what happened. Let's say five. Let's say 13 months. 13 months. Wow.
Oh wow.
Almost 40%. 13 months is almost 40%. This is a pandemic. This is during a pandemic. This is craziness. Okay, I want to take out condos, but I may have to start all over again from the beginning. Give me one
Oh, okay.
second. Hold on. How do I unfilter? Unfilter. Hold on. Okay, I'm going to start from the beginning. I'm going to clear this.
No problem. But that's it. Just even condos is interesting actually.
Very interesting. So
What is
let's
this
say,
one? Oh, we're back to Toronto.
yeah. Well, I'm gonna filter it to Hamilton.
Although that's interesting because now when you look at the condos and Toronto, condos in Hamilton have been, I mean, they've been steadily going up, but quite jaggedy
Yeah.
going up. People were very confused in Hamilton, I guess.
Yes. Well, that's just it, right? Like people are get a lot of people coming from Toronto to Hamilton, and Hamilton's not like saturated with condos like Toronto, right? It's not a huge market. But so here's Hamilton. Here's Hamilton based on, this is a year. This is 13 months. The price has gone up 36% in 13 months. This is across the board. So let me take out condos and just do.
I'm actually very surprised that in Hamilton, actually, in like July to almost November was very stable, actually.
Yeah,
I,
July.
I felt like it was just going up a lot even in 2020 because I remember I was looking at a lot of houses in that time in Hamilton and I felt like they were just continually going up, but there must be some kind of probably like other houses like detaches going up higher than for example condos
Yeah,
to
because this is average, right?
yeah,
So let me
that's
do type, because I think if I put detached, I think the numbers will be quite different.
Mhm.
No, you're right. Still, for detached, it was kind of stable there. Although that you're right, that wasn't. But really, like this, the Hamilton detached market, really,
Yeah,
I
this
want to see.
January was I felt like January, February, March was like an anomaly. It just like jumped so high.
But it's still like March was. It's still pretty high. I want to see something here because Hamilton. I just want to go back 20 years in Hamilton. I want to see what happened because I think this number is going to be crazy.
Yeah, it'll probably be like
220%.
yeah.
Wow. So there you go. Like yes, the market does go up and down, but over time goes up,
Mhm.
right? I still think there's just a ton of upside in Hamilton, tons of upside.
Yeah.
Let me
Yeah,
see.
it's like I always say, it's so close to Toronto still and doesn't match the prices of the
No,
GTA.
does not at all. So pretty
Affordable.
interesting, eh? Okay, I want to see one more thing. Okay, I can't do, I want to see if I can filter this, and I know there's a way to do it by first time buyers, first time buyer properties. Give me 1 second. I think I can. Yeah, I'm not going to fiddle around on here. I know I can do it, but anyway, that's a good visual there for the people who always say I'm going to wait because the market's going to crash. It's just I don't see it. I don't see it. Not with less than a month of inventory and interest rates that are under 2%, and the fact that people have a lot of savings right now. I think what's come out of COVID is that people have saved a lot of money, and so
Yeah.
they're going to spend that money when this all kind of gets a little bit back to normal. They're going to start spending that money, and what are they going to start spending that money on? So it's pretty interesting. But
Yeah. And do you think everything will go back to normal? Do you think everything will actually stay open?
who knows? Who knows? We'll see. I think we're getting to that. We're getting to that point of
Getting
um,
closer
you
for
know,
sure, at least.
the number of people who are vaccinated, right? So I think once it gets to a certain number of people that are vaccinated, I think it will make a big difference. I mean, look at lots of states are completely open. I mean, 40,000 people at ball games, and we're not even. I mean, we were just allowed out of our house 3 days ago.
Yeah.
So it's not going to be long as more people get
Is it
vaccinated.
though over there? Is it because they've taken the vaccine or
They have
they're
a
just
higher. I think right now I'm not 100% sure because I don't follow it all that closely. But I think someone was telling me that per capita we've got more people vaccinated right now than they do in the States.
Yeah, I was
So
gonna say because I think because from what I hear, it's mainly the in the U.S. It's mainly the huge metropolitans that are still going through some shutdowns. I don't know if they're still going through some, but a lot of the other places are open and able to
yeah,
actually get out and about and do things.
yeah.
But it is
So
interesting, yeah, that the
yeah,
metropolitans seem to be still not doing well.
which would make sense because you have more
The
people in those
density,
areas, right? So
especially in the US, where the densities in the metropolitans are much
yeah,
higher,
yeah.
especially to here.
So Diana, it's 1:48. We're going to wrap up in a couple of minutes, but maybe you can tell people about the networking event coming up at the end of June if they're interested in getting involved in that next Tuesday. So again, I'll just say this part and then you can talk about the networking event. So Diana and I are live every Tuesday at 1 o'clock on Facebook. And each week is a different topic. So this week is stats. Last week was mindset. Um, that's, I think, our favorite subject, mindset.
Mhm.
Mindset stats, and then different types of investing, burrs, flips, buy and holds. And then the fourth week is
Miscellaneous.
Q&A,
Yeah.
miscellaneous, whatever we feel like talking about, which is whatever we do anyway, but it's okay. And then the fourth Thursday of every month, we have our networking event, which Diana will talk about. So go ahead, Diana.
Thank you. Yeah. So we have our networking event coming up this month again, and it will be on the difference between commercial and residential real estate. And we'll be having a lawyer talk to us about it. So I think it'll be a really good topic because he's going to even be showing us, for example, even just the differences between a purchase agreement and how those differences are. So we'll get to see a lot of the legal side, what are the differences between the commercial and residential real estate. And then after that, we'll all get to meet each other, network. It'll be one-on-one 5-minute breakout rooms. And so everyone will get to meet each other. I think it'll be a lot of fun to network, and it's all virtual. And yeah, that's about it. It's a
Awesome.
1 hour of each, 1 hour speaking segment, and then a 1 hour meeting new people.
Awesome. That's great. So if you found this helpful, please like our pages and follow us on Facebook. Also, share this video to anybody you think might be interested in investing. That would be great. Really appreciate that. And we will see you next Tuesday at 1 o'clock on the flip side.
Sounds good. And if anyone wants to buy any tickets, it'll be on my link tree. And if you buy one ticket, you'll get another 3. So you'll get to come to the next 3, or whichever 3 you want to, whichever 3 interests you.
Perfect. Thanks, Diana. Always a pleasure.
Awesome. Thank you, Sandy.
See you next week.
See you. See you, everyone.